The successful warrior is the average man with laser-like focus, Bruce Lee. We have a great training for you, all the subscribers, in our show notes. It's entitled Backtracking Using Stock Charts to Find Trading Patterns. All of the training is for free. Look in your show notes if you're not a subscriber for free. Go to chartingwealth.com, sign up. What do we see going on these markets today? We see everything down. It all started rolling over. Well, stocks started rolling over. Gold started heating up in its rollover as the market ended the day. I'm looking here at post-market right now, and I see that stocks continued down, both the S&P 500 and the Nasdaq 100. I see that TLT popped up about 0.5% after the close. It was down for the day, and gold up 0.05% in aftermarket trading. So again, everything down. Let's jump into the S&P 500. Some exciting things may be developing. We shall see. What we see happening, of course, on the charts, on the weekly chart, still continued down. The overhang is still down. We do have a very small up candle that is forming, no wick on the bottom, very small box completely contained in the prior week's candle with a little wick on top. Not much going on for the week. Is the up move stalling? Are we seeing the bull trap being sprung? I think the bull trap's probably going to be quite a bit more recovery. Folks, we've got a long, long way to go. Do you understand that the entire country is out of work pretty much? Many people. Businesses are failing. Unemployment is going to go through the roof. And the government can do a few things to mess around with it, but the long-term forecast is going to be really, really bad. And I'm not trying to be a fearmonger or anything else. I'm just trying to tell you the truth. Everything I've learned in economics over the years, from studying, from getting degrees, from being in the real world and watching, when you suck as much wealth out of an economy, as much productivity, because remember, wealth comes from productivity, not by printing money. I don't care what the Fed says. It's productivity that increases the wealth of a nation. And what we have had happen is productivity has gone to zero. The ramifications of that are going to be dire indeed. You can print as much money as you want, but the velocity of money is what we are very fascinated in, and that's what we want to see increase. They try to do that with lower interest rates, printing more money, repo, overnight repo, all the things that the Fed tries to do, but they can't produce anything. All they can do is produce zeros on a screen, more zeros on a screen. What does that mean in the long term? You can't make chicken salad out of chicken manure. You have got to have productivity. So remember, the overall hang in the market is down. Even if we have some bursts of up movement, look back to the bubble back in 2000. Started in 2007 in December. We saw the first hits of it in March of 2008, and then the bottom was all the way, if I remember correctly, September of 2009. So folks, this is going to drag on. We will trade these charts as they give us opportunities, but just keep in mind what is going on. Now, let's look at where we are. We got a green up candle for the week forming, down day on Tuesday as we go into Wednesday. Now, remember, of course, that we had the Friday candle. We have the Monday, Tuesday candle. Wait a second. I'm getting so ahead of myself. I'm still on the weekly chart. We have a strong down move underway, 2-day chart well underway. That's the weekly chart. Let's go to the 2-day. I knew that didn't sound right. The 2-day candle was Friday, Monday. This is just Tuesday. I knew the candle wasn't ending. What we're seeing the candle do now is push through. It's pushing through the weekly trend line at this point. That is what our average pace is showing us. Our derivative oscillators flipped over, even with the down day, and our price percent oscillator is heading up. Now that candle's not completely drawn yet, so we go to the 4-hour chart, And this is what I wanted you to see. We see this drag along up in the morning, down in the afternoon. Look at it. It's laying right there on the 4-hour trend line. Do you like us adding those to our charts? Well, I want you to see that action as things push through different trend lines. We pushed through the 2-day trend line back on the candle representing Monday and Tuesday. Tuesday the 24th, Wednesday the 25th of last week. And we saw that happen. That actually occurred in the morning on the 25th. And then what we had happen was continued up through the 26th. So it was pushing through that prior trend line and then slid sideways, trying to push above it. Where's the high? 262.80, 262.43. So we haven't hit that high that we hit all the way back on the 26th. That's why you see a devolution in the derivative oscillator. That is showing us the oscillation of highs over lows is slowing. That's what the derivative oscillator helps show us. That's why it's called a leading indicator. It is a triple smooth version of the relative strength index. That's why you don't see a relative strength index on here. We use Constance Brown's derivative oscillator. And that's what we see happening. We see the price percent oscillator flattening out. So what we are waiting for, looking for, is again a breakdown pushing through the 4-hour trend line and a crossover going down, which sets us up for the weekly and the 2-day in the same direction. That would give us a potential jumping in point. Not the strongest of points. We like the recross on the 2-day, and of course our number one favorite is the weekly vertical crossover, but we'll see what happens. We're waiting for that to occur to give us potentially a trading opportunity. Now, let's go from the S&P 500 to QQQ, and I will keep my chart straight. What do we see here? We see another green up candle. It's a little bit bigger than the prior one. Looks like it's reaching a little bit higher high than the prior week. We see that the price percent oscillator is slowing in its down move just a wee bit. Derivative oscillator losing a little bit of downward momentum. Go to that 2-day chart. First day of the latest 2-day candle. Where do we see it? Well, as we look at the 2-day candle, we can see that we broke through the 2-day downtrend line all the way back on Tuesday the 24th, representing Monday and Tuesday the 24th. And then what we have seen happen over the last 5 days now, we have seen up movement. We have not crossed over on the price percent oscillator, so we're still in a confirmed down move, although weekly derivative oscillator has gone positive. But again, the candle's not drawn yet. We had a down day of 0.85%, but again, the overall mood in both the 2-day and the weekly is still down. We go to this 4-hour chart, and what you see here is, of course, price. We've got that little trend line. Price is above it. We have a red spinning top at the end of the day. Indecision tending down, but it's a red open box. It's not a big, strong red down candle, anything like that. We see the price percent oscillator flattening a little. Derivative oscillator peaked, like we saw in the S&P 500, back on the afternoon of the 26th, Thursday, the 26th of March. So we have hit a higher high since then, so we'll just continue to watch, wait and see. Is the market petering out? Don't know. One down day doesn't mean everything has changed, so we'll just keep our eye on things. We have something else interesting going on with gold. We'll talk about that when we get to it. Let's leave stocks, go to bonds. Bonds down for the day, 0.81%. Now, bonds are still in a confirmed up move on the weekly. It is weakening a little bit. Derivative oscillator losing downward momentum, but we have a nice big green up candle. Well, not a huge up candle, but a much bigger than the S&P 500, we'll say. We go from the weekly to the 2-day, and that's where we see some weakness. It is a red open box, not a closed, solid red down candle. It is an open box. It means a slowdown in the up movement. And what we see happening is it's riding right there along the 2-day trend line, just the first day of the latest 2-day candle. and we'll continue to watch price percent oscillator flattening, derivative oscillator losing some downward momentum. Again, still heading up. So both the 2-day and the weekly are in confirmed up moves. And what do we see going on here? Well, we saw a push through in the morning through the 4-hour trend line, still above the 2-day. A little bit of a recovery in the afternoon. So we'll watch, wait, and see what's going on. If you are still in a bond trade, since your 2-day and your weekly are still moving and your price is above the 2-day trend line and the weekly trend line, just keep an eye on things. If you jumped in on that 2-day recross, more power to you. Just continue to watch, pay attention, particularly as things are showing a little bit of weakness. Now we're going to leave bonds. And lastly, we go to gold. This is what I want you to pay attention to. Look at what gold's doing, down substantially for the day, 3.18%. So what we see, though, for the week is a green up candle that is forming in gold. We see that on the Heiken Ashi candlestick, but when we look at the price percent oscillator, which we pay the most attention to, it's actually heading down, as is the signal line. Derivative oscillators gaining downward momentum. That's based upon a huge down candle for the week ending the 20th of March. We then had a green spinning top the next week with a huge wick on each side of the candle, and that again did not help as far as downward oscillations on the derivative oscillator. And of course, at this point, we did have a strong down day. We see that price percent oscillator reflecting that. We go to the 2-day chart. That's where you can see more of it. You see a red down candle with a long wick on the bottom, little wick on top, after having previously had a red open box candle, which shows a slowdown in the up movement. And what we see, of course, developing is a bounce off the 2-day trend line, which is like a recross. But do we call it yet? No, it hasn't happened yet. It is bouncing off right now. Of course, that will close. Now, it's still technically, of course, a down candle, and you can play something particular on that because, now again, it hasn't closed yet, but it's still a down candle. It's still a down price percent oscillator. It's moving away. It did not cross over. We never signified a crossover going up, got awfully close, and now is pulling away. And I want you to pay particular attention to this, though. Look at what is happening. Look how the day ended. Did any of you pull the trigger on a down move like purchasing a virtual put on gold? I did not do so. I came close to doing it, but again, a little bit of trepidation. I was glad to see that price did push through the weekly trend line, but again, not the confirmation I was looking for. I was hoping it would be a little stronger. Technically, it did push through. I can see that. I did practice trade that. I did screenshot what the cost of the puts were, and I'm going to follow that up in the morning and see if that was actually profitable. Now, that's something, again, for you guys. I hope that you're using as many opportunities as you can to practice trade things like this. Now, I know with all of the crazy volatility in the market, some of you have been a bit shocked at the range of price movement, but again, that is one reason for some of the trepidation that I had with the crossover, but we'll wait and see. I'll report to you tomorrow as to how gold did. And the reason I compared gold to what's going on in stocks is, what does gold typically do? Gold typically moves down when stocks move up, just like bonds typically are inverse to stocks. Why? Because money flows into bonds when stocks are having a problem. Money flows out of bonds when stocks are doing really well. Now, it is interesting that the S&P 500 and the Nasdaq 100 were down today. Gold was down the most, which again, what is that telling us? That there's going to be continued up movement? Are we still seeing some unwinding in gold positions? Not really sure, but we saw everything down for the day. So again, Market's still trying to shake things out. That is what gave me a bit of trepidation with gold. Now, if stocks are simply priming to go up again, we, of course, would typically expect gold to move down. It's been somewhat screwy lately. We've talked about that, probably related on some unwinding of positions and people just having to get out of their gold to cover problems on stock positions. Perhaps that's part of the answer. So that's where we are. I want you to pay close attention to what happens with gold in the morning. And of course, we're going to pay lots of attention to what happens with stocks, both the S&P 500 and the Nasdaq 100, as this week moves along, hoping for more shorting possibilities in the S&P and the Nasdaq 100. Folks, that's where we are as we end the day. Don't forget, got a great training for you on backtracking. What that is talking about is looking at historical movements in the charts in your favorite stocks or ETFs and looking for patterns that occur again and again, and how well your different time frames work to help you make trading and or investing decisions in your practice trades. I think you'll get a lot out of that. It's in your show notes. If you're not a subscriber, sign up for free at chartingwealth.com. Thank you, my friends. We love your comments in the show notes. Always feel free to write us, cw@chartingwealth.com. We mailed out more books today to folks who bought them. Charting Your Way to Wealth is available. We have an autographed copy for you. If you live overseas, the way to get one is to simply email us, cw@chartingwealth.com. We'll send you a PayPal invoice. Pay that. We'll send your book to you wherever you are in the world. Thank you so much again, friends, for all of the Patreon supporters. Next Wednesday, we will be doing our live question and answer call-in training session for our Patreon members. So if you want to support and help us in the work here, any of the 3 levels of Patreon support will get you into that live call. That's going to be on the 8th of April, 12:30 Eastern Daylight Time here in the U.S. God bless. All the best from the whole team at Charting Wealth World Headquarters.